It is no secret that interest rates are going up. In fact, they're probably going to go up several times in the next 12 to 18 months.
So what does that mean for you? Like as a new multifamily investor, you might be thinking this is the time to pause and just wait and sit it out, hoping that they go down again.
Today, we're going to explain to you how do the interest rates impact your multifamily real estate investing activities and how you should adjust and why you should absolutely not wait even a moment to get into the game.
Yeah, go now. So interest rates have been low, like historically the lowest they've been in a long time. And experienced investors know that that's not sustainable. The only way they go is up, right? So what does that mean for you? It means that they're not likely to keep going down, and you need to know what to do in order to stay in the game.
All right, so what we're really talking about here is, should you wait? And our answer is absolutely not. But here's why. So Jen just said they've been historically low, and actually they've been historically low for a historically long period of time. I really, really believe that had coronavirus not come, we would have seen interest rate hikes probably 2 years ago. Like, this has been a very long time. It's a long time coming. It's not gonna go back down. So if you're waiting to get into the game because you think you might be able to get a better interest rate later, that's highly unlikely. And all you're really losing is time. Back in the 1980s, you might have heard this before, like rates were absolutely insane. And the Fed did that in order to really, really quickly put a stop to the inflation that was happening. But rates got as high as 18.5%. Now, I can't fathom operating in that environment at all, nor have we ever had to, nor do I think we will ever get there again. But when Jen and I started, I was very accustomed to paying, 7% or so interest. That was pretty common. So the fact that things have been so low, to me, has been very strange, but it's kind of a bonus. But we've been accustomed in the past to operating with a higher interest rate. So one of the things we're going to talk about later in this video is the specific activities you can do to hedge your risk when you're getting started in real estate. And then, of course, the other thing we're dealing with now is we're dealing with inflation. And for a long time, the word on the street was, it's just temporary. It's not temporary. Inflation is here. It's a reality, and it's just something that happens in the normal economic cycle. So because of that, we definitely don't expect the Fed to lower interest rates. And in fact, they're probably going to hike it up a couple of times in order to help slow things down so that inflation doesn't get out of control. One of the things that happens during an inflation time is cost of everything goes up, right? So we know that the cost of gas goes up, the cost of commodities go up, things become more expensive. The other way of looking at that, and I hate to say it like this, but that's the way people in our circles, this is what we say, cash is trash, right? Cash just doesn't have the value that it has during the previous times, because now the same $100 that we would have had in our wallet buys fewer goods and services. The absolute best way to hedge against inflation is to put your money into a hard asset. That way you're not impacted by inflation. Your dollar gets locked in, and now you get the benefit of over the years appreciation, being able to raise rents, and really being able to take advantage of, mortgage pay down, the depreciation expense, all the tax benefits, etc. So you just don't want to wait. The sooner you can get in, the sooner you can take your cash and get it into a hard asset, the better off you are.
And speaking of that, we're going to be talking about how we're coaching our current students on how they can hedge against all of this in a minute. If you like what you see so far, click the like button for us. Okay, in the interest of this topic, I do have a question for you. As always, Stacy, why do you think that people choose to freeze in times like this?
Really what it comes down to is, especially when you're new, you don't have the benefit of years of experience behind you. You're a little tentative anyway. So people are generally worried about making a mistake. They don't want to make a move and have it be the wrong move, because now that's going to set me back so much further. That's the mentality. And sometimes it really puts people in a position where they're frozen. But we had one of our students a couple of weeks ago when we started talking to our students about interest rates are going to be rising and how to hedge against that, which we'll talk about here in a minute. One of our students said, I feel like I'm frozen. I feel like I can't make a move because I don't want to, if interest rates go up, the property values might go down, and then I don't want to overpay. And we were like, okay, hold on just a second. The thing you have to remember is you're buying for long-term cash flow, right? We are not talking about fixing and flipping here. We are talking about long-term rental property. So it doesn't matter what happens over the next year or 2 years. That's almost irrelevant. It's what's going to happen over time because you're holding the property. It's more important that you get in. If the prices go down a little bit, which frankly, every indicator we've looked at indicates that's probably not happening, because the supply is so low with housing, you know, this is your best time to get in. Do not freeze, and definitely don't stop, because that is just gonna put you further and further back in time. Time is your best friend when you get into real estate. You wanna have as much time with your property as you can to get the absolute most benefit out of it.
Yeah, so if you happen to be frozen right now and you don't know, God, should I really get into this or not? Make a comment below and we'll personally respond to you and give you some advice on how you can get into this and put your foot on the gas, really. This is not the time to hit the brake.
So let's talk about what kind of adjustments you should make when you're getting into multifamily real estate investing. Number one, you want to make sure you're choosing markets that are less susceptible to the massive market swings that happen when market swings happen. So focusing in areas that it's kind of like, you know, slow and steady wins the race. The Midwest tends to fall into that category nicely, but going to areas where your dollars are going to go further, you could actually cash flow because the money makes sense, which that probably means you're going to look into getting into remote investing if you don't already live in a market like that.
Number two, you want to use 1/4 to 0.5% higher interest rate when evaluating your deals as of now. That way, between now and closing, if anything changes and the interest rates go up, you're covered.
Number three, make your offers based on the cash flow you're shooting for and the cash on cash return that you want to get. Just because a seller is asking for X price doesn't mean you need to offer that price. You need to evaluate the deal, run your numbers, and make whatever offer makes the deal work for you with that little bit of higher interest rate. If you're in a market that's really competitive, you might feel tempted to, I gotta make whatever offer I can to get into the game. Getting into the game alone is not the objective. Getting into the game with a property that's gonna provide a good, solid return and cash flow, that is it. So don't be tempted to overpay for properties. If everything is so competitive that prices are through the roof, pick another market and look somewhere that it makes sense.
Number four, do not under any circumstances go with an adjustable rate. Get a fixed rate. And the reason why is because we've heard them say that they're gonna adjust this rate and increase the interest rate of maybe 6 to 7 times, right? We personally believe it'll probably be three increases, because nobody really wants to do 4, 5, and 6 or 7 when there's so many politics involved, right? Nobody really wants to be that guy. And we're in a midterm. So ultimately, you want to get fixed rate so that you insulate yourself. You don't want to be victim to adjustable mortgages. Those are muy malo. Bad.
All right, so the gist of it is, if you want to get started in multifamily and real estate investing, don't wait. All right, the times are not going to get better for you to get in. So today is the day. If you know you want to do it, start making the moves that get you into the right deal, so that you can start building your financial future, building a portfolio that takes care of you, and so that you basically secure your future and create massive passive income and financial freedom.
Absolutely. If you do want to get into multifamily real estate investing, but you're not sure what's the first step, the second, or the third, you can click the link in the description below and a member of our team will hop on the phone with you and talk about your goals, your resources, and how we can hold your hand and get you to where you want to be.
The other thing we want to tell you is that we have a free Facebook group. It's called Multifamily Real Estate Investing. So if you want to be around people that are like you, on the journey, looking to learn, come join us in that Facebook group. We do tons of free education and content there. And every week, Jen and I make ourselves available for a question and answer session. It's live, it's in Zoom, we're face to face. You gotta come to the Facebook group, register, go to events, and then we'll see you there. But any questions you have about real estate, we're there to answer them for you.
If you want to learn more from us, watch our video over here on the 5 things you must do to create passive income for your life. And we'll see you guys next week.